Good evening all. It gives me an immense pleasure in welcoming you all for the today's session, Income Tax Awareness of NRIs. This session will give an overview of income tax provision relating to the wide taxability of NRI income in India and the tax exposure on the payments and receipts made by NRIs, documentation and the substantive requirements to show the source of income and other related areas on taxation. Here we have Mr. Sreejith, who is going to create awareness and advice on NRI taxation. Mr. Sreejith is a member of the Institute of Chartered Accountants of India and a commerce graduate. He has more than 20 years of experience in advising MNC clients and large Indian groups on assignments involving restructuring of cross-border operations, mergers and acquisition strategies, business restructuring, inbound investment and entry strategies, transferring price, etc. He also has considerable litigation experience, including litigation strategy and representing clients before tax and appellate authorities. He has advised several large multinational and large Indian companies on a range of domestic and international taxation and regulatory laws. Sreejith has worked with EY, KPMG, Deloitte and Grant Thornton for more than 12 years and has covered wide geographic location across South India and GCC countries like Kuwait and Qatar. Currently, Mr. Sreejith is a director of Capta, a multidisciplinary business consulting firm for corporates, and a director of PravasiTax, an online tax platform designed exclusive for NRIs to advise their tax and business related matters in India. Mr. Sreejith, over to you. Thank you.
Mr. Kalayarasan, for the brief intro, and I must thank you a big note of thanks to TEF Tamil Nadu Engineering Forum Kuwait today for making this event, and one more, I should actually thank Mr. Afzal Ali, who is a owner of Insurance Secure and insurance brokerage company based out in Kuwait, and in fact he is the person who referred me to TEF Kuwait for making this event. And before we start the sessions, I just invite Mr. Afzal Ali to just to intro himself also, so we can actually get into the discussions. Over to you, Mr. Afzal Ali.
Thank you, Mr. Sreejith, and thank you for the whole of Tamil Nadu Engineering Forum for having us, both me and Sreejith. And it's a proud moment of being part on a very auspicious day of Vinayagar Chaturthi and Ganesh Chaturthi, which is a very important festival in India. And especially when we are talking finances in the eve of this program, and I am sure the prosperity should shower in all good means to all the members and participants, irrespective of being from Tamil Nadu or any part of the world who are present in this particular program. And it's a delight to be part of this kind of very value-added program, which Mr. Sreejith has accepted to take it forward and enhance our knowledge from the basics and fundamentals of the taxation, and more. It is rather than we can call it as a tax saving program, it is a tax planning program. And very important is that India as a country, or any country for that matter in the world, taxes are very important part of the development of the infrastructure and the future of our countries. So it is going to be very important how we can see how we can contribute to the government, and our futures. And also very, very important, thanks to my management of Insure and Secure. Special thanks to Mr. Satish Sharma and Mr. Manu Sharma, General Manager of Insure Secure, and my whole team who had very positively agreed to sponsor this program. Thank you, and all the very best, Mr. Sreejith, and God bless you all. And I would like to confirm, as a very strong follower of Mr. Sreejith, this is the third or the fourth program I am attending. And believe me, every program when I attend, I sit with a notebook and my calculator and my pen. So I request each and every one of you to please have at least a piece of paper and a pen, because what you get here is something amazing. And Mr. Sreejith comes with a lot of knowledge, and I'm sure the program is going to be exciting and very, very useful. All the very best. God bless, and please carry on, Mr. Sreejith. Thank you.
Thank you, Mr. Afsar, and it's my pleasure. And straight away we'll get into our discussions today. I don't want to. And one more, just to give a intro, I have my colleague, especially the non-chartered accountant and non-financial. I just quickly give most of these background about how this whole session is go about forum. So and first fundamentals, that is taxation. I won't be much of the tax jargons, the professional jargons. I will try to make it very simple as possible, so that you can take it forward, whatever the basic concepts and understanding about the taxations. Before start the session, why I started PravasiTax is fundamentally I used to take NRI taxations as a topic when I was in Kuwait, and just kind of a free weekend I used to take sessions for the many small engineering groups and doctors associations, many Kerala. So I am from Kerala, and so most of the Malayali association I used to take sessions. Then I understood, okay, most of the NRIs, especially from those people from the non-financial background, they're almost completely blank in terms of understanding about the taxations in India. That is the purpose actually I started this PravasiTax, educate and provide the tax consultancy or a tax compliance services for the NRIs who are sitting abroad, so that they're completely out of the Indian system. And so we will have around 1 hour sessions. We have different topics we are discussing, especially only for NRI perspective. And if you have any doubts during the sessions, please note down, and you can even put your query on the chat box. Shilpa, my colleague, she's already there in the discussion. She will take all your questions, and most of the questions I could have maybe addressed during the session itself. If still some questions unanswered, that will be we will be taken at the end of the sessions as a Q&A. We will be taking forward. So let's get into other topics. Income tax awareness sessions for NRIs. 1 second. Yeah. So this is a very common question. Many NRIs ask me, well, why a NRI pay tax in India? Okay, this is a basic fundamental questions. Many NRI, when I say NRI tax or a PravasiTax, first question is why we should pay tax, because we are exempt, we are NRIs. So wait a minute, I will just give you a brief understanding. All NRIs of the Indian citizen or a overseas citizens or a PIO holder, any person, okay, even a foreign citizen is required to pay tax in India for the income what you receive from the Indian sources, okay, especially those incomes. I will just give you an example. I don't want to use a tax jargons here, but you will relate those category of income most of the NRIs might be earning from India. Those incomes are taxable in India. First foremost is the interest income. All your interest income from the banks or from the companies or from any partnership firm, you might have deposited some money. All those interest incomes are subject to tax except your NRE account. So non-resident external account, that interest alone exempt. Other than all interest are subject to tax in India. Then your rental income, it could be your commercial property, it could be your residential property. All the rental income from India is taxable. Then your share trading income. So most of the NRIs who make investments in the share market, so those capital gain income, you might know short term or a long term, both the capital gains are taxable. Even now, recently, the dividend also taxable in India. Next, the property sale. When you sell any property, land or a plot, whatever the gain, not the sale, the gain resulting from that property sale is taxable. Then you might have some investment in the bank, business or a professions. Those incomes also taxable. If you note down, all these categories are actually the source of income. Either assets are based out in India or you receive in India. So those incomes are subject to tax in India, irrespective of the even a citizenship. So that means not only the NRI, even a foreign citizen also subject to tax if he earns these types of income from India. Now let's see how this income is get taxed in the hands of an NRI. So 5 heads of incomes are there. Income from salary, normally NRI won't come under this category. Basically those employees working in India, those people only subject to tax under the income from salary. house property, then business category, then capital gain. Like you said, the share trading and your property sale, all those items will come under the capital gain. Then if any of those income is not falls under these four heads, like salary, house property, business, or a capital gain, if it is not exactly not falls under these category, then it comes under the income from other sources as a residual category. Now let's see how income is computed in India. Okay, as I mentioned earlier, you have 5 heads of income. You total all the 5 heads of income. Then you will arrive the gross total income. Out of the gross total income, you can claim deductions like your LIC policy premium or a medical insurance policy, then your house property, if you're taken any loan for your house property, those premiums. So those possible deductions can be claimed. I'm just giving a very, very high level. It is not that easy, but I'm just giving an overall how the income tax is calculated. Then you will arrive with your taxable income. Out of the taxable income, you will apply the applicable tax rates. I will discuss how the tax rates applicable here. Then applicability of the surcharge will be there and education cess will be there. This is how you compute the total tax payable. Okay, this is just a very, very, very high level kind of a snapshot of how the tax is computed. That easy, but just give you a kind of a basic understanding. Now let's see what are the tax rates applicable for NRI. There is something called slab rates, and you concentrate on what I'm right now. There is a little bit of difference. Rates are here. I'm just discussing right now the slab rates which are applicable for NRI. Up to 2.5 lakhs, no tax, zero tax. 2.5 lakhs to 5 lakhs, there is a 5% tax. 5 lakhs to 10 lakhs, there is a 20%. And above 10 lakhs, it is 30%. I'm going little slow because it's numbers and the percentage. In this particular group, a few people might know all those rates. With my interactions with NRIs, many of them are actually not aware. That is why I'm just taking it a little slow. This is the slab rate applicable for an individual NRI. Why I mentioned here, it's below the age of 60 years. In India, 60 to 80, a different rate available, and above 80, there is a different rate. But note down, these rates depends upon the age are not applicable for an NRI. Those rates are only applicable for a resident person. Okay, if you are a senior citizen, falls between 60 to 80 year age, up to 3 lakhs, no tax. And for example, above super senior citizen, above 80-year-old, up to 5 lakh, no tax. The moment you are back in India, once you are maybe settled down in India and you falls under these age category, then only these benefits are available. So for a NRI, the common rates is the basically the 2.5 lakhs category. That's the only slab rate applicable for a NRI. Now these are the slab rates. Now you should note down a particular category of incomes. The certain category of income are subject to fixed rate. If you might be selling any property or any land or a flat, villa, whatever it is, if you hold the property for more than 2 years, that property, the profit what it arising from that sale of property will be treated as a long-term capital gain that is taxed at 20%. That means it is a flat rate. So those slab rates are not applicable. For example, after selling your property, even your profit is only 5 lakhs, you will be paying kind of a 20% tax. That means 1 lakh you will be paying tax. There is no slab rates not applicable. That is a concept of special rate and the slab rates. Next, you might be investing in the share market. If you are holding a shares or a mutual fund for more than 1 year, that profit will be treated as a long-term capital gain. Up to 1 lakh, there is no tax. In excess of 1 lakh, there is a 10% tax. If you hold the shares for less than 1 year, it will be treated as a short-term capital gain. That short-term capital gain, there is a flat rate of 15%. Recently, dividend also subject to tax. dividend flat rate is 20%. So those people who doing share trading, you just note down there are some fixed rates applicable. You are not comes under the slab rate category. Also, you should note down whenever you do any property sale, then again there is a special rates comes into the 20%. These are the normal tax rates applicable for NRIs. Now let's see how this, just kind of a small example how this income is calculated. Assume you have a rental income of 1.5 lakhs. There is no income tax because you falls under the slab rate. Assume you have any bank interest like NRO interest income, that's around 50,000 rupees. Again, there is no tax because you falls under the slab rate. But in this case, for example, you have a short-term capital gain or a long-term capital gain, there is a fixed rate. So assume if your short-term capital gain is 50,000, there is a 15% fixed rate. If it is a long-term capital gain is 75,000 rupees, there is no income tax. The reason up to 1 lakh, there is no income tax on the long-term capital gain. Hope it is clear. This is how the, just kind of an example how this taxation has been works. Very important, a person who earns any capital gain from the share market, like long-term or a short-term, those category of income in this example, 50,000 rupees, 75,000 rupees, total 1,25,000, you will be end up in paying a fixed rate of tax. Very important point, you are not eligible to claim any LIC premium or a medical insurance premium. Basically, the ATC, ATD type of a deduction shall not be eligible to claim against this capital gain. This is a very basic difference comparatively with a resident. Now, very important, last year there was another alternative tax regime. We call it as a special slab rates has been announced in India. In the previous example, the general slab rate is up to 2.5 lakhs, it was nil. Then 2.5 lakhs to 5 lakhs, it was 5%. Then above 5 lakhs to 10 lakhs, there is a 20% rate. So that basically very important, above 5 lakhs, any person who is earning income, you can always do a comparative analysis, general slab rates and the special slab rates, because in the special slab rates, you can see every 2.5 lakhs, there is an incremental 5% tax reductions. For example, normally a person earn income in excess of 10 lakhs, his slab rate comes under the 30% bracket. In this example, in this particular new slab rates, 10 lakhs to 12.5 lakhs, it is 20%, that means 10% reduction. Then 12.5 lakhs to 15 lakhs, further 5% reduction. It's always be beneficial whenever you have this kind of an income in excess of 5 lakh rupees, always do a comparative study. Every year you can do comparison, which is the more beneficial. You can take that beneficial rate. One important point you should note down when you apply these special slab rates, no exemptions, no deductions. That means no further claims are allowed. Earlier, normally you are eligible for this ATC, LIC premium, medical insurance premium. Those deductions were available, but if you opt for a special slab rates, these exemptions, deductions shall not be eligible. And a person, normally it won't come under the case of a NRI. If any NRI is having a business income, you can only opt only 1 year. Okay, every year you cannot go out and opt in. So that option is not available. One time option if someone has a business income. If most of the NRI may not have business income from India, so those NRIs actually every year you can compare which is the more beneficial rate, general slab rates or a special slab rates. There could be some tax savings when you file your return in India. Now let's see when it is mandatory to file a return. This is a very common question many NRIs ask. Is it mandatory that every NRI should file a return? Answer is no, it is not mandatory. There are some conditions is attached, then only it is mandatory to file a return. Let's see those conditions. As I mentioned earlier, up to 2.5 lakhs, no tax. 2.5 lakhs to 5 lakhs is 5% tax. Very similar way. If your income exceeds 2.5 lakhs, then it is mandatory to file a return. It's 2.5 lakhs rate the slab. If you deposit a crore rupees in the current account, then it is also mandatory to file a return. This may not be much of relevance for NRIs. Current account normally been managed by the business people, so it may not be much of relevant for NRIs. Now let's see the very important provisions which is very much applicable for NRIs. This particular condition, like if you incur a 2 lakh rupees in India for doing any foreign travel, then it is mandatory to file a return. This was introduced before COVID. After COVID, we know all stuck in the respective places. So practically not much of relevance this particular provision. But once it is going forward, if it is people started traveling, then this become a kind of a condition. This is a very common condition. That means if you incur an electricity bill of more than 1 lakh rupees, that means monthly 8,333 rupees per month, then it is a mandatory to file a return. If you have any building in India, whoever your spouse or your parents or yourself is the owner of the property and incurring electricity bill in excess of 1 lakh rupees, it is mandatory to file a return in India. So what very important aspects here should note down. So far the entire income tax law, it was only income. It was only the taxable income was the criteria to file a return. But 2 years back, the conditional moved from income to expenditure. Now you see the foreign travel, electricity bill. So the income tax law is moving to track your expenditure, a source of income. Where is your source to spend this kind of money? That is actually, if you see the foreign travel and electricity bill become a condition for filing a return. Future, as of now, it's not a law, but future, there could be possibility that these kind of expenditure may also become a conditional thing for filing a return, like your wedding expenditure, your gold purchase, your event management, your textile purchase. As of now, it's not a law, but in the way it's moving, there could be possibility these types of expenditure may also come under the condition for filing a return. Normally, return filing due date is 31st July because of reason COVID. It was earlier, it was extended till 30th September. 2 days back, further, this is extended to 31st December 2021. So that means for financial year 2021 tax return, you have time till 31st December 2021. Now let's see how to file an income tax return. Earlier, the income tax portal was income tax India e-filing.gov.in. That was the website was used. Recently, the income tax portal has been revamped. This is a new portal, incometax.gov.in. You can note down, Google it. And this particular new website has lots of features, okay, and many features. It's been artificially intelligent kind of a system is being brought in the system so that lots of your financial transactions are tracked. And now return is being, most of the return is being pre-filled with the lots of informations what department has. So very important point. NRI make mistakes, you should select the right form. I repeat, many NRIs makes this is a fundamental mistakes. You should know what is your applicable form. A NRI doesn't have any business income. Right form is ITR 2, not the ITR 1. ITR 1 is a very basic form. Don't select your ITR 1 form. If you submit and using an ITR 1 form, it is almost an invalid return. Because I'm sharing this particular information, many NRIs does this mistake. Then ITR 3 is basically if NRI has any business income, ITR 3 is the right form. And when you fill ITR 2 and ITR 3, there are some basic information, additional information you need to give. If you are a director in any private limited company, you need to give that details. And also you own any equity shares in any private limited company, that also mandatory to give. And also you should give your tax identification number in your foreign country. and most NRIs, especially from the GCC, there may not be, there is no tax identification number. You can give your passport number as a reference. And if any NRI is having a taxable income in excess of 50 lakhs, then lots of information has to be given, including your foreign assets. If anyone is claiming any treaty benefit, I will explain it a little more detail. What is treaty? What type of benefits available for NRI? If you are going to claim any treaty benefit, the tax residency certificate need to be furnished. I will in the subsequent slide, I will have a more detailed discussions on the treaty part. I will discuss there. Now, the new income tax portal has lots of informations. Very important information is basically your passport number. Okay, your profile. It is mandatory to provide your passport details. So with these passport details, earlier income tax portal was not accessing the passport informations. Now going to be going in the future, your passport will be validated, and based on your arrival, how many days you are in India, outside the country. So all those informations income tax department will have in future. You can validate your foreign mobile number. As of now, practically it is not possible. Even Indian mobile number also not possible to validate because lots of glitches are happening right now. But hopefully in maybe a couple of weeks or a month, this particular feature will be available in the portal. Then bank accounts need to be pre-validated. Most of the bank accounts, your name and your PAN or other, whatever you gave with your bank, that details has to be pre-validated. If there is any mismatch, then you need to go back to bank and correct it. Otherwise, that bank cannot be validated in the income tax portal. This is a very new information in the portal. There is a specific manual itself available for NRI community. Lots of informations for NRI and many manuals, how to download your TDS credit, how to file a return, what is the right form. So many FAQs are available, especially for NRI community. You can go to the income tax portal and check the NRI tab, and lots of information is available for NRIs. Now, this is a common features. Many NRIs ask me, okay, can we gift to relatives and non-relatives? If I make investments in the companies, is there any tax impact? So let's see how NRI can make gifts. So an NRI can make gift to relatives and non-relatives. Tax impact, when you give to your relative, there is no tax impact. But when you give to your non-relative, any other person, if the gift value is excess of 50,000, it is taxable in the hands of the person who received the gift from you. Very important. Whenever you give any money to any other person, you refer this is a gift type of transactions. There is a tax exposure for the person who received the money from you. Let's see how normally NRI make investments. As you all know, NRI make investment in the companies, firms, LLP, bank deposit, share market, properties, land. So no tax. You don't need to worry anything. Whenever you make investments in India, at the time of making investment, there is no tax in India. Okay. The only tax exposure will be there if any income generates from these investments. Okay. Then only there is a tax exposure. Otherwise, whenever you make the investments time, there is no tax in India. Same time, you should note very important point. Whenever you make any investments in any company, firm or LLP, please provide your KYC details, affidavit, what is your financial capacity in the Gulf, and why you are making these investment, how genuine these transactions. Okay. So these are the basic informations you should give to those companies and firms and LLPs. Otherwise, that will be treated as an unexplained cash credit in their books, and it will be a huge tax exposure. Similar way, your relative take the money from you as a gift and he makes investment in those companies also. You always give those details. So I'm not want to discuss a little more detail here. The reason this is a very wide topic, but only thumb rule, whenever you make investment in the business, Please, even giving gift to your relative also, please share your details. Okay. Now let's see the TDS and TCS. Many NRIs know what is this TDS and TCS, but on the safer side, to get the benefit of all others, I will just explain what is TDS and TCS. TDS is basically tax deducted at source. Fundamental thing you should know, this is not your final income tax. This is not the tax you're supposed to pay in the country. TDS is a mechanism is being derived in such a way that the government is collecting tax at the source itself, who are giving the money. For example, if bank is giving you rental income, bank is giving you the interest income, a tenant is giving you the rental income, banks and the stockbrokers are giving you the share trading income or dividend income, companies giving dividend income. So the TDS obligations is on all those payers, okay, income. So they have the duty to deduct tax at the source, so that government can collect the respective tax portions whenever a person is earning income. And finally, year end is over, the 31st July, when the return, when you are going to file, at that time you calculate all your income and arrive your taxable income and your tax payable. Out of that tax payable, you can claim this TDS as a deduction. If it is excess TDS was there, that is refundable. If it is a short TDS, then you supposed to pay final tax at the time of when you are filing return. This is a concept of TDS. It is linked to your expenditure. So it's linked to your income. Now let's see, TCS is basically a tax collected at source. TCS is linked with the expenditure. So TDS is linked with an income. TCS is linked with an expenditure. Just for example, an NRI is, you might be buying car in India, correct? Whenever you buy a car in excess of 10 lakh rupees, there is a 1% TCS is being deducted, collected from you. This is not a road cess or not a GST. It is actually income tax. They are collecting 1% along with your car purchase. The reason the government is required to know whether the person has the capacity to buy the car in excess of 10 lakh rupees. Just basically to track those people's expenditure. That is the TCS concept is there. So both the TDS and TCS are available if there is no tax in India. I will just give you a little more detail. So let's see, normally for NRIs, interest, as you know, there is a 30% TDS applicable for NRIs. Rental, again 30%. Here, please note down, for resident, rental TDS is 10% if the rental income is in excess of 2.4 lakhs. So that threshold is not applicable for an NRI. Even you are earning a rental income of 1 lakh rupees, the tenant is supposed to deduct 30% TDS on the rental income. Share trading, a long-term capital gain, that means if it is more than 1 year old shares, then 10% is the TDS. If it is a short-term capital gain, it is 15%. If it is a dividend, 20%. So very important. Here, one important aspect you should note down, long-term capital gain is exempt up to 1 lakh rupees. Assume your total long-term capital gain is only 50,000 rupees, still TDS works. That means still the 10%, 5,000 rupees TDS deducted if you have earned 50,000 kind of a long-term capital gain. But when you file a return, there is no long-term capital gain because up to 1 lakh it is exempt. That means that 5,000 TDS what was deducted is refundable, but not with the short-term capital gain, not with the dividend, because both the cases, the TDS rates like 15% and 20% and the final tax rates both are same. So there is no difference in terms of short-term capital gain and the dividend. But same here, I'll highlight one more point. This TDS most of the time will function when there is an income. Sometimes you may clause loss as well. in the loss scenario, sometimes the TDS may not function, but that benefit of loss you can claim when you file a return in India. Property sale, again, there is a 20% TDS is there. Motor vehicle purchase, I have discussed little detail earlier. There is a TCS of 1%, TCS is applicable. Very important point, assume once you become a resident in India, and normally resident, you will have a 10% TDS rates. Normally, for example, rental, interest, and property sale, it is only 1%. So those TDS rates will be double if you don't have any tax filing record in India for last 2 years. That means a person is not filing return in last 2 years, his TDS rates normally will be double up if there is a TDS is applicable. This is not applicable right now for NRI. The moment you become a resident, then this particular exposure may come if you don't file the return in India. Now let's see how this TDS refund is work out. The reason I am just running this particular slide for an example, I have many NRI cases, they may not even know there are some TDS is actually due to them which are refundable, and they lost those TDS because they never file a return and claim these TDS in India. Because their understanding of TDS is basically their tax. That is not understanding. TDS is not your final tax. TDS is just a mechanism from the government side to collect a percentage of tax because they don't know your final tax liability. That is the reason they are actually collecting at the source itself. But when you file a return, you can final tax liability, you can show, declare and claim, depends upon the TDS. In this example, taxable income is your out of your 5 lakh taxable income, you have a 12,500 as your tax payable, out of which, for example, the bank might have deducted say 2,500 as a TDS, then ultimately you will have a 10,000 as a tax payable. So in this case, you need to pay an additional tax of 10,000 rupees because the TDS was short. Another example, assume your taxable income is only 3.5 lakhs, then your tax also been shorter, like 5,000 is your tax payable. Assume bank deducted around 25,000 as a TDS. In this example, you have around 20,000 is refund due. This can be filed a return and claim. The other example, assume your taxable income is below the threshold of 2.5 lakhs, then there is no tax payable. The entire TDS is refundable. Hope it's clear. These are very basic questions most of the NRIs ask. Assume a person is only earning a 2 lakh as a rental income, and he can submit a form called Form 15G or 15H for non-deduction of TDS because his total income is not exceeding the threshold limit of 2.5 lakhs. The question is whether an NRI can furnish these forms. The answer is no. These forms are applicable only for resident taxpayers, not for the non-resident. So initially I discussed for an interest, there is a TDS of 30%, right? And dividend, there is a TDS of 20%. So question is there any possibility to reduce these TDS rates? Yes, it is possible. For that, you should know something called Double Taxation Avoidance Agreement, DTA, or sometimes people call as a tax treaty. So what is DTA is, if an income is taxed in both the country, for example, an income is taxed in Kuwait and also in India. Just take an example like interest. So the interest what you earn, it is taxable in India. There is no tax in Kuwait, but the Kuwait has the right to tax also, you being a resident of Kuwait. Since you being a resident of Kuwait, you can take benefit of the India-Kuwait tax treaty. So just treaty is giving you a relief if any income is taxed both the country. The person who is a resident of the other country, he can take the benefit of the treaty or the Income Tax Act in India, whichever is the more beneficial provision. That is how the treaty works. So the moment you avail the treaty, again take the example of India-Kuwait tax treaty. Under the India-Kuwait tax treaty, the interest is taxable at the rate of 10%, not at the rate of 30%. So you can submit a form called Form 10F to the banks here, and you can say, okay, this is TDS shall not be at the rate of 30%. It should be at 10% because you are a resident of Kuwait. This is eligible for NRIs. Most of the banks accept this Form 10F. Who can apply the DTA rates is basically, as I said, take again example of India-Kuwait tax treaty, 10% TDS rate applicable, tax rate applicable for interest income. For that, claiming that beneficial rate, you must be qualified to be a resident of Kuwait. Your civil ID in Kuwait is not the criteria to qualify to be a resident of Kuwait. You should physically stay in Kuwait for more than 182 days. Okay, then only you become a resident of Kuwait. For that, you need to get the tax residency certificate from the Kuwait. Just touch upon one more point here. Tax residency certificate is eligible is in Kuwait. You have to go to Ministry of Interior. You will get the certificate of your physical presence in Kuwait. With that physical presence, you can approach the Ministry of Finance. The Ministry of Finance, there is a particular application form. You can submit that form. You will get the TRC certificate. But there are some challenges, practical challenges, because the Ministry of Finance accept only the corporates as a taxpayers in the country. Individuals are not taxpayers. They are not liable to pay tax in Kuwait. But in the recent times, many NRIs actually approached Ministry of Finance, understand the requirement is come from India, especially. So they will accept those forms and they will be issuing the TRC. I have many NRI friends. They have actually been taken TRC in the Kuwait. So now, as I discussed the concept of TDS, now let's discuss two new TDS provisions introduced in the country, very much applicable for NRIs. Okay. First one, TDS on cash withdrawal. So normally, as you know, TDS is applicable only on the income, correct? Interest income, rental income, share trading income. First time in India, I would say even in the world, first time in the country introduced a concept, apply TDS on your cash withdrawal from the bank. Assume a person who files tax return in India for last 3 years. If he goes to bank and withdraw more than ₹1 crore, then there is a TDS applicable at the rate of 2%. Now I will discuss why this particular provision is very much applicable, relevant for NRIs. Take another example where a person is not at all filing return in India for past 3 years, especially NRI community. NRI community, I doubt even not even 2% people are also not filing returns in the country because they believe there is no tax, there is no requirement to file a return. But that NRI goes to bank and he withdraw at 20 lakh rupees, in excess of 20 lakh rupees, assume 30 lakh rupees, then there is a 2% TDS applicable. That means if someone withdrawing 30 lakh rupees, there is a 60,000 rupees of TDS will be deducted by the bank. The same NRI, if you withdraw more than ₹1 crore, the TDS rate is 5%, not 2%. The reason I will tell you, all your money sitting in the NRI account or NRO account are tax free. There is no tax exposure. I mean the money balance amount. maybe you're only the interest, only the exposure, but the money what is actually been sitting in your NRI, NRO account are tax free, no tax exposure. So you will be freely withdrawing those money from the bank account for spending in India. Might be your house constructions, or might be your wedding, some wedding event, or some event management. All those expenditure, most of the contractors demand cash. So you will be freely withdraw those money and you spend in the market. You should note one important point. Expenditure in your hands is an income of other person. Okay, every person's expenditure is an income of the other person. So those people are earning the income from NRIs in India. They never declare that the GST purpose or for income tax purpose. So the income tax law is being designed in such a way all your cash expenditure will be tracked even in future. So these TDS are refundable. You file a return, you can claim this 60,000 rupees TDS. But along with that TDS, you can expect a shock cause notice also from the income tax department, because you need to give a proper explanations for why you withdraw in cash, whom you paid in cash, okay, for what purpose. All those details you might need to be given. Okay, otherwise it become a taxable income, the person who actually been spent. Those are the exposure in the hands of the person who spent in cash. In India, more than 2 lakh rupees cash expenditure, cash, any transactions in more than 2 lakh rupees, lots of restrictions. Even in a real estate deal, more than 20,000 rupees, there is a restriction. So many business expenditure spending more than 10,000 rupees, there is an exposure. So that in India, already after the demonetization, cash has a lots of restrictions. So I recommend in this particular forum, please don't withdraw cash from the bank. Ultimately, you may not have the problem at the time of withdrawal, but later, after 3-4 years down the line, you may have kind of an exposure. At that time, you may not even know why you withdrawn that cash and whom you paid. That kind of information may not be available at that point of time. Again, this is also another relevant TDS provision has been introduced. Normally, contractors and professionals, the TDS is applicable only when a business guy, a company or a firm, whoever doing business, then only this is applicable. But now this is very much applicable even for your personal consumption also. That means, for example, you are constructing a house, the contract value is in excess of 50 lakh rupees, then there is a TDS of 5% applicable. Okay, many times the contractor may not inform you because he will only talk about the GST portion of the contract value, but he may not inform you the TDS portion. But ultimately, the TDS is obligation also on the person who make these contract payments. Please ensure if the contract value is more than 50 lakhs, there is a TDS of 5% applicable. Now, let's discuss a very common transactions, property purchase and share trading. There are some fundamental difference. I will explain little detail. Whenever a NRI buy a property in India, if you are buying a property from a non-resident, okay, you need to apply TDS at the rate of 20% if the property is a long-term capital gain. That means if the property is holding for more than 2 years, then it become a long-term capital gain. Then the TDS rate is 20% on the capital gain portion. That means sale value minus cost, the indexed cost, that difference is called as a profit. That profit is in the income tax called as a capital gain. So in this case, very important, many people get confused with a resident transaction. Whenever you buy a property from another non-resident, even the property value, the sale value, even if it is 40 lakhs, even 30 lakhs, if there is a gain, the TDS has to be deducted at 20%. Very important, you need to apply TAN, that means tax deduction account number. Then you need to file a form called 27Q. the TDS return has to be filed. Now, let's take an example. When you buy a property from a resident. When you buy a property from a resident, then you need to check what is the total transaction value. If the total sale value is in excess of 50 lakhs, then the TDS is applicable at the rate of 1% on the sale value. Okay. Here, fundamental difference. If you are buying a property from a non-resident, there is no threshold. If you're buying a property from a resident, you need to check what is the total sale value. If it is in excess of 50 lakhs, then the TDS rate is 1%. In the non-resident case, it is 20%. And very important difference is, if you are buying a property from a non-resident, your TDS of 20% is applicable on the capital gain, that profit portion, not the entire sale value. If you have any doubts in terms of determining this capital gain, you have an option for the buyer, not the seller. The buyer can approach the income tax department under section 195(2). You can apply and you can get your TDS kind of a value, what exactly the TDS has to be applied. That is a better way. Okay. If you are buying a property from a resident, very simple, no formality. You can actually, a form called 26QB, that form, you can deposit the tax in the bank. Okay. If you have any doubt, please do reach out to me. I will explain. This is a very common difference. Many NRIs may not aware. Actually, whenever you do the transactions, there is a significant difference. Depends upon, not, it's only from the person who is selling, not from the buyer. Okay. This is a same condition applicable even if a resident is buying the property in the country. So that it is more relevant is basically the seller point of view, not from the buyer point of view. Now let's see another share trading is one of the common mistakes NRI does. As you know, if it is the shares is holding more than 12 months, it is long-term capital gain. If it is a shares is holding less than 12 months, it is a short-term capital gain. TDS is 10% on long-term. TDS is 15% if it is a short-term. As I said, okay, earlier, up to 1 lakh, no tax. Here, complete tax. There is no difference. Here, very important, in terms of long-term capital gain, you bought shares before 31st January 2018, very important. If you bought any shares before 31st January 2018, you can take the cost as on 31st Jan 2018 as a base cost if it is in excess of your original cost. Say for example, you bought a share in 2017 for 30 rupees and 31st January 2018, that share value is 45 rupees. You can take 45 rupees as a cost of acquisition for calculating your long-term capital gain. In this case, you cannot claim loss. You can only reduce your profit. That means you can only consider to take this as a cost when you calculate the long-term capital gain. No such relaxations for the short-term capital gain. Anyway, short-term is just only a 12 months period. Whoever doing the share trade, before the shares who bought for before 31st Jan 2018, you will get this relaxation. In the long-term capital gain and the short-term capital gain, you should note very important point is the loss set-off. If any loss comes from the short-term, that loss can be offset against the long-term capital gain and also against the short-term capital gain. But if a loss comes under the long term, that loss can be offset only against the long term capital gain, not against the short term capital gain. Whenever you have only these category of income, long term capital gain and a short term capital gain, no further deductions allowable. The reason, these rates are already a lower beneficial rate. That is why there is no further deductions available for against these income. There are some common mistakes NRI does. Please note down.
If you have any loss, it is mandatory to file a return, then only that loss is claimable. If you are, many people believe, okay, when I need to file an income tax return, only I have an income. Very wrong. You have any loss that need to be claimed, file a return. Intraday trading, NRIs shall not be permitted to carry any intraday trading in India. Having a demat resident account again is a big mistake. Please don't carry your demat resident account. I will explain it in little more detail where exactly the conflicting situations will arise for NRIs. Now the tax residency conditions. I don't want to discuss in more detail what is the provisions of residency and all, but very fundamental. Any NRI, you have to note down how your residential status change when you visit India. A NRI visiting, he has an income which is less than 15 lakhs and you stay in India for more than 182 days, you become a resident. The same category, NRI who has an income in excess of 15 lakhs, then this 182 days stay reduced to 120 days. Then also you become a resident. So the very important threshold is your taxable income. Don't consider your NRE interest income. You calculate all your taxable income. If it is excess of 15 lakhs, then your stay is 120 days. That means just 4 months. Then there is a new concept came, deemed resident. You don't need to visit in India and assume you have a more than 15 lakhs income and you are not liable to pay tax in the other country. Then you become a deemed resident. Okay. And that means even without your physical presence, you may become a resident in India. There's something called deemed resident. Let's discuss what is the concept of deemed resident. 2020, the first time in India, the deemed resident concept was introduced. So most of the GCC NRIs got panicked. Then immediately our finance minister explained through a press note, this is not applicable for the bona fide workers in the Gulf countries. So it was been not targeting the Gulf. But in 2021, surprisingly, the income tax is defined a term called liable to tax. After giving the explanations, definition for liable to tax, now GCC countries residents, since you are not liable to pay tax in the other country, since there is no income tax law, you will fall under the deemed resident concept. As I said, the government has announced a press release. In the press release, they have said bona fide workers are not comes into the picture, but not much of clarity what happens to the bona fide business owners. If anyone is carrying any business, the concept of deemed resident is whether applicable to them or not is a very big question mark. One thing, NRIs in the Gulf region can be take some relief. In 2020, when the law introduced, the memorandum, it is very clearly mentions why this particular provision is going to introduce. So what our finance minister said during the budget speech, stateless people are disturbing the tax world. State for the income tax purpose, it's country. So those people, because of their money power and muscle power, they stay across different countries in such a way, they never become a resident in neither of those countries. So that means since you are not resident in those countries, you being an Indian citizen, so government said, don't worry, we will tax you in India. That is the concept of this stateless. But all the NRIs who are right now in Kuwait, you all are actually belongs to a state, that is Kuwait. You all are resident of the country. So the only challenge, your civility is not the proof of document to show you are a resident of Kuwait, because this is something comes under the income tax law. So that means you supposed to be a resident under the income tax law. So this is a concept. The moment you become a tax resident in the country, this particular provision shall not be applicable. So as I said, how to obtain the TRC certificates is a big challenge in the Gulf countries, but still there could be some effort you put. Definitely it is something is available. Again, a very, very important topic. What happens to those NRIs who are actually stuck in India during the COVID-19 pandemic period? As you all know, India announced the lockdown in somewhere in March 22nd. So almost all the airports were closed from March 22nd. You note down financial year 1920, the CBDT brought a circular 11/2020. In that circular, what they were very clearly gave a relief. So those NRIs stayed in India, stuck in India during 22nd March to 31st March, exactly that 10 days of your stay shall not be considered for your residential conditions stay. That means earlier we discussed 182 days, then 120 days what we discussed. Those days, this 10 days shall not be considered. So now what happens to the critical year, that is financial year 2021, that is this current assessment year. 9th May, that means immediately after the first circular, the CBDT brought a press release, not a circular. Please note, it is not a circular, it is a press release. They said, okay, we will release a similar circulars to exclude the period of till normalization of the international flights. So that got promised until it resumed the normalization of the international flights, we will give you the similar relief. As you all know, April, May, June, July, almost, I think in somewhere in mid of August only the flight started operating from India. So that means almost 4.5 months, there was a complete lockdown in India. So that means eventually many of them stayed more than 120 days by default, those who were stuck in India. But unfortunately, there is no further response from the government after this 9th May 2020. One NRI went to Supreme Court. Then Supreme Court gave a very strong directions to the CBDT to pass guidelines to give clarity. Then CBDT came with a circular on 3rd March 2021, very important circular, and this is going to be a very debatable circular also in future. They said, okay, there is no possibility for giving relaxation. And so they said, those people who stuck in India during financial year 2021, you become a resident in India. So the logic for government for not granting this benefit is assume a person who stayed in India for more than 182 days or 200 days and treating him as a non-resident. Eventually what happened? That person stayed less than 182 days in the other country as well. So in other country, because he stayed less than 182 days, he became a non-resident. And India also give him a kind of a relief by treating him as a non-resident. That means he became a non-resident in both the country. Result, he won't be paying any tax in both the country because he is a resident, non-resident in both the country. So this is basically the concept of the government for not giving this relaxation. But unfortunately, there is no double taxation concept in the Gulf country and India, because Gulf countries, there is no tax at all for individuals. So there is a significant exposure for those Gulf residents. Those people were stuck in India during the financial year 2021. Even a couple of days back, yesterday, I think, Supreme Court, a team of NRIs went to Supreme Court for challenging this particular provision. Again, Supreme Court dismissed the petition. It was a writ been filed by NRIs. They have dismissed. They said, okay, that is actually they don't have much of option to give a relief, because anything relief need to be gettable is only by changing a policy that is from the CBDT, from the government side, not from the Supreme Court. So, but having said, this is going to be a debatable issue in the future. And with this particular current scenario, as the CBDT circular stands, NRIs were stuck in India financial year 2021. Even this current financial year also, you become a resident in India. Now let's see Once you become a resident, what exactly the exposure for NRIs? Okay, please note down very important question. As you know, you all are NRIs. As I discussed, those incomes sourced from India, received in India, or deemed to be received in India, like your interest, share trading, rental, property sale, all those incomes are taxable. And that's why we discussed so far. Now let's see what happens the moment you become a resident, how this is going to change. Resident has two categories. One is called not ordinary resident. Another one is called ordinary resident. Let's first discuss the not ordinary resident. The moment you become a not ordinary resident, all your NRI income is taxable, plus your overseas income also taxable if it is controlled from India. That means that overseas income is in the nature of business or a professional income, not your employment income. So that means the moment a person become a not ordinary resident, your salary income shall not be taxable in India. Taxable in India. Okay. Now the very critical residential status is called as an ordinary resident. The moment you become an ordinary resident, your global income is taxable, including your overseas salary. Even including your Kuwait salary is taxable in India the moment you become an ordinary resident. So this is a critical challenge for those NRIs. Let's see who all become an ordinary resident, who all become a not ordinary resident in India, because those people who stay in India during the financial year 2021. Now let's take years as example. So as we discussed, what are the basic conditions to become a resident? For example, financial year 2021, the person who stay 182 days or stay 120 days plus 15 lakhs income, then you become a resident. That's what we discussed right now, right? Okay. So you all become a resident in India, financial year 2021. The concern now, when your Kuwait salary become taxable only in a situation you become an ordinary resident. Now let's see how a NRI become an ordinary resident in this financial year. What is very important, go back to 7 previous years. That means you should count from 2013-14 to 19-20. That means last 7 previous years, you count your how many days you were physically present in India. If you stayed in India for more than 730 days in last 7 years, you become an ordinary resident. Okay, go back, take your passport and check last 7 years, how many days I was physically present in India. There, assume a person who left India during 15-16 period, then eventually he stayed in India for more than 730 days for those 7 and 6 years. I mean those yellow one. That is the first condition. Second, assume you are not meeting these conditions. That means you only stayed 600 days in last 7 years. Then again, you should go back, check 3 more previous years. Go back and check your last 10 years. In last 10 years, assume you become a resident in 2 out of 10 years. That means last 10 financial years, you become a resident in 2 out of 10 years. Then also you become an ordinary resident. That 2 years is not continuously. It could be any of those 2 years. Okay. Go back and check if any those 2 years out of 10 years you become a resident, then there is an exposure. So very important point. I have many NRIs right now itself, around 20 NRI cases. There is an exposure for their Gulf salary is get taxable in India because of this particular provisions. Those NRIs who left left to Gulf during financial year 15-16, 16-17, those people assume they were stuck here 2021 period. There is a big challenge. Okay. So this is a significant exposure. Hope I think may understood precisely. Now let's see what happened to the NRIs who's returned to India. The moment you are back in India, you lose your NRI status. Your NRI account has to be redesignated as resident rupee account. Very important. All these NRI status, your NRI account, NRO account, all those concepts comes under the Foreign Exchange Management Act, not under the Income Tax Act. So it all depends upon the FEMA. So whether the person's intentions to stay outside the country for an uncertain period. So that intention is very important. The moment you are back in India and your intentions to stay back in India for an uncertain period, you lose your NRI status. The moment you lose your NRI status, you need to redesignate your NRI account into a normal resident rupee account. So that means your interest income shall be taxable. Okay. Why your interest income is taxable? You can note down, you have pen, section 10, subsection 4, subclause 2. Only this is only section I am referring here is basically very, very important section. You note down that particular section, section 10, subsection 4, subclause 2. Under that particular section, you know that your NRI interest is exempted. Only reason you are qualified to be an NRI under the FEMA, not under the income tax law. The moment you lose your NRI status, immediately you lose your exemption of your NRI interest as well. So as I said, NRI has an option to go back, or you have some kind of a time period planning to go back. Meantime, you don't need to actually close your NRI account. You can redesignate your NRI account into resident foreign currency account, RFC account. So that means that need to be maintained in a convertible foreign currency. And still you can maintain your foreign bank accounts as well. Only conditions, you need to declare this as a part of your taxable income once you become a resident. Very important informations. Whether NRI can maintain a regular saving bank account in India. No, it is not possible. Under the FEMA, there are consequences. I'm not, because of time constraint, I'm not discussing the consequences, but practically NRI shall not be maintaining any SB account in India. Now, quickly run through expenditure based tracking. Basically, before COVID, the income tax law was actually been designed in such a way they're going to track all your personal expenditure. It was part of the law. There was a even our Prime Minister has kind of a Twitter. They have launched, even our previous income tax portal also had this particular concept. But unfortunately, after the COVID, what we can see, this is actually stopped this particular provision. But there won't be any surprise if income tax law bring the entire section as it is in future. So this is not a section right now in the law, but I'm just giving you a highlight where exactly the intention of the income tax law is going forward. Your jewelry purchase of more than a lakh, your health insurance premium or your LIC premium is for 50,000 rupees. You buy any marble for more than a lakh. Your hotel bill for more than 20,000 rupees. Your education fee or donation is for a lakh. Your home appliances a lakh. Electricity consumption again a lakh. Then your domestic business travel or your foreign travel. This is nothing to be for an NRI. This is a common provision is going to be introduced in the country. So all your personal expenditure will be tracked in the future. So that means your 26AS will have all these transactions will be reported in the future. But right now it is not a law, but in future, this is going to be part of your 26AS. So how it works is, as you know, right side, if you bottom, you can see total population is around 140 crore. Out of 140, 126 crore people have got Aadhaar, 50 crore people have got PAN card, and PAN and Aadhaar linked as of now 33, 2 months data. But very important, you should note down income tax payers in the country. That means 5 lakhs to 10 lakhs kind of a taxable income offered by 1 crore. And about 10 lakhs, it is only 50 lakhs. That means out of 140 crore population country, only 1.5 crore people only pay income tax. So that is the reason the law in such a way the Aadhaar has replacing your PAN card. So your Aadhaar is linked with your PAN. So that means most of all your financial transactions is going to be tracked based on your Aadhaar. And PAN and Aadhaar linking is mandatory. 30th September is the due date. It was extended many times. This is the last due date. We are not very sure. This may further extend, but as of now, not much of information on this aspect. So what happened? You don't link your PAN with Aadhaar. That means your PAN become inoperative. With that inoperative PAN, you cannot open a bank account. You cannot do any property deals. You cannot do any financial transactions where PAN is required to mandate. You cannot file your return if your PAN is inoperative. So whenever you give a wrong PAN, a inoperative PAN, there is a 10,000 rupees penalty is there. And if you want to link your PAN and Aadhaar later stage, there is a late fee of 1,000 rupees. So assume an NRI who doesn't have an Aadhaar, is it mandatory to link PAN and Aadhaar? It is no. The reason there is a circular 37/2017, it is relaxed. If NRI without Aadhaar, your PAN is still valid. You don't need to have a kind of any linking exercise. So these are the financial transactions, except the highlighted in red, okay, and all the blue highlighted transactions are subject to PAN is a mandatory, PAN and Aadhaar. So that means most of the transactions now comes under the PAN and Aadhaar category. Threshold is just kind of 50,000 rupees. So that be careful. I don't want to read the whole transactions, but assume most of the financial transaction now your PAN or Aadhaar is mandatory to quote. Very important here, especially NRI should note down your banks, including cooperative banks, post office, corporates, stock exchanges. So all these parties are mandatory to report the certain financial transactions. Let's see what are those financial transactions. Your interest income, that means tomorrow your NRI account interest income also be reported. Your dividend income, capital gain. So these are the TDS items are also subject to tax and it will be reported. Now I will explain how this is going to be a conflicting situations for NRIs. A NRI who still maintain an NRI account even after becoming a resident in India, he will have a conflicting situations when he submit a return in the capacity as a resident. Bank is reporting his NRI account interest income, since NRI interest is not subject to TDS. So it will be a conflicting situations. How come a resident person is maintaining a NRI interest account? So there will be a conflicting situation. And again, another conflicting situations, an NRI who maintain a resident demat account. When an NRI who maintain a resident demat account, what happens? The stock exchanges or brokers, when they deduct TDS, the TDS is applicable only for a NRI category, not for a resident. For a resident traders, there is no TDS applicable. So the concept will come, a NRI who files a return, the stock exchange, they reports the capital gain, then a NRI without TDS capital gain, then again have a conflicting situation. So be careful. So all those transactions where you previously managing, all those transactions will have a conflicting situations in future. Again, very significant amendment. These high value transactions will be okay. That means your cash deposit in excess of 10 lakhs, your credit card payments, your purchase of shares and mutual funds, and any property purchase or a sale of 30 lakhs and term deposits of 10 lakhs. All those transactions will be reported. So whenever you do these kind of transactions, you can expect a shoppers notice from the income tax department. You don't need to worry as being an NRI. Only thing is you should prove you are an NRI. Now the income tax return, there is something called pre-filled tax return. As I said, you have Aadhaar and PAN linked transactions will be tracked. So based on those PAN and Aadhaar, all your financial transactions will be reported. When you file a return, you select your form. when you take the option for pre-filled, most of your financial transaction will be auto-filled. So very careful. The 26AS form, as it has always been used as a form to cross-check your TDS credit, but going forward, this 26AS will have lots of financial transactions. So only NRI, being an NRI, there is no tax, but only thing it is income tax. There is no system available to verify a PAN card holder or Aadhaar holder whether the person is an NRI. So that is the reason every NRI, you need to prove you are an NRI, you have to file a return. Then only you can actually show all your source, whatever you are spending, those are actually not taxable in India because you are an NRI. Faceless assessment, very important point. Here you should note down, going forward, all the assessment is going to be a e-assessment format. Most of your tax assessment will be, for example, if you are from one person is from Chennai or a Coimbatore, your income tax officer might be sitting in Mumbai or a Pune. You have to be very careful. And very important informations, go to your compliance portal. If there is any notice or a clarification is being asked, please give within a proper timeline. Otherwise, you become an assessee in default. So regularly check your income tax portal. If you are a income tax filers and you do any financial transaction, there could be some notices will be sitting in your account. Okay. Then as a big nose, like normally NRIs does these transactions. That is the reason actually we are saying, okay, big nose. You should not maintain any SB account. Intraday trading not possible. PPF, you cannot make investment in PPF. You can maintain a PPF when you took this PPF when you are a resident. You can maintain. Otherwise, PPF you cannot make investment. A new PPF, NSC, National Savings Certificate, you cannot make investments. Post office savings not possible. Sukanya Samriddhi scheme, NRI cannot invest. And real estate, agriculture, farmhouse, and plantation, all those has a restrictions from a FEMA point of view. NRI cannot mistake. And very important, never misrepresent as being a resident in the country. And this is my last slide. Okay, as I said, why a NRI file a return whenever you have a taxable income, but not only the income category, there are other reasons also NRI should file a return. Like you want to claim your TDS refund, you should file a return. You want to carry forward your loss, you want to prove your NRI, you want to process your visa like US, UK and Canada, there is a tax return copy, mostly the department asks. And as I said, you want to increase your threshold of 20 lakhs to a crore of TDS on cash withdrawal. It is mandatory to file a return. Apply for a bank loan in future. And you have to take any admission for NRI quota for your children for a medicine or a engineering. Again, they may ask you for the NRI status as a proving tax return copy. Term policy. Then you want to participate in any government tender, you need to get at this thing. And last but not least, basically to reduce the chance of receiving shock cause notice, because as I said, income tax has no system to verify whether the person is an NRI. So the only proof is basically to prove you when you file a return, then only that's the only proof that you are an NRI. Okay. With this, I just conclude my session, and I took extra time. I'm sorry from my side because the topic is like this. Okay, that is the reason. And you can note my number 9746400931. It's an India number. I'm available on this WhatsApp, and you can note my mobile email ID. If you have any doubts after this session, please feel free to WhatsApp me. I'm available, and I have a good amount of network of NRIs. I'm always available. My team is available to answer any queries. So with this, I stop my sessions. We can take the Q&A. Thank you so much. I stop the slides here. Hearing again.
Thank you so much for that, sir. My name is Shilpa, and I'm here to help you with the Q&A. Just an introduction for the other people here. I am a team of PravasiTax, and I take care of the client relations for PravasiTax. I did get a lot of questions here, sir.
Yeah, please.
We would,
Yeah.
we can
address. Yeah.
Right. So I would go ahead. I guess Mr. Zakir was the first person to ask questions. So if you're here, sir, you can go ahead and unmute yourself and talk. Mr. Zakir? If no, I can just ask the question as well, yeah? Okay. Mr. Zakir asks, how many houses are exempted from tax?
Okay. How many houses? Assume you can two property. You can actually be keep it as a self-occupied. Okay. Beyond two property, those property will be comes under the deemed let out. So, for example, assume you have 4 property. Up to 2 property only you can keep it as self-occupied. Beyond 2 property, you need to show even you don't have any rental income. It will be treated as a deemed let out property.
All right. He also has, if I sell a property, the gain is 2.5 lakh plus, whereas my expense for maintaining the property are 40,000. Should I file a return?
Rental income, or you said 2.5 lakhs, right?
Yeah, right. I guess it should be a rental income.
Yeah. 2.5 lakhs, it is not mandatory to file a return because it falls below the threshold limit of 2.5 lakhs total income.
Right.
Yeah.
And also he says, for gift purpose, relative means a blood relative or any?
Blood relative and spouse relatives. A very long list of relatives. Most of the relatives comes there, and maybe I can WhatsApp the relative list. It's a very long list. Both your blood relative and also your spouse relatives comes under the relative definition.
Right. Also, he has one more question. So I guess he's not able to unmute himself. So that's the reason he is just putting in the questions here. He also has the question saying, if we sell the property at a loss, can we claim a capital loss?
Yes, possible.
I hope, Mr. Zakir, your questions were answered. We have Mr. Khalifa Rizwan. He says, is tax in mutual fund on the profit or on the amount invested?
Tax on
the tax that we the mutual fund, on mutual fund, if the tax we have to give, is it on the profit or on the amount that is invested?
Only on the profit, not on the amount invested. Only on the profit. Tax is always be on the income side, on the profit side, never be on the investment side.
All right, sir. I hope that question was answered. Mr. Syed Jalal, he asked how to access Form 26AS from outside India.
Yeah, very important. So practically, sir, actually, it's a very difficult. What we also been experienced. 26AS form is actually been as of now it's not allowing, and we also tried many times for through our NRI network. Practically not possible, and that's what we understand. And also understanding why that logic actually for those NRIs actually not able to. So that I'm not able to why that restriction. But you can share your login, sir. Actually, we will get you to discuss if require any challenge.
I hope that answers, sir. Mr. Syed, I would, as we said, we do have our contacts shared here. If you want, you can put in the questions over there as well. Okay. Mr. VK Sharma asks, can an NRI give money to a resident as interest-free loan instead of a gift?
Interest-free loan as a gift.
Yeah. Instead of a gift, can he give it as an interest-free loan?
It's possible. You can actually formally enter into a loan agreement with the party, and also there must be some genuine reason actually why someone is giving an interest-free loan. But since loan is always be refundable, so that is a concept of loan. Gift is not refundable, so the significant difference. So if someone is giving a loan, you can actually have a formal contract. What is the repayment schedule also when you return? So those kind of things being covered, then it become a loan. So something non-returnable, non-refundable loan is always being given.
All right, so we have Dr. Mahindran asking, is Aadhaar mandatory for NRIs? I guess that was answered also.
No, sir, it is not mandatory for NRIs.
Right.
An option being given to the government.
Mr. Balasubramaniam asks, how about for NRIs holding demat account? I'm not sure what this question completely is. If you can just reframe that, sir. How about for NRIs holding demat account?
NRIs can hold a demat account. Only the question is NRI cannot hold a resident demat account. That is the only restrictions. Otherwise, only through demat account only NRI make investments.
All right, Mr. Balasubramaniam, I feel that was the question that you wanted. If there is any more, you can go ahead in the chat. Mr. Jay Kumar asks, what happens to fixed deposits of Kuwait residents who got stuck in India due to no flights for more than 180 days? Does the interest from FDs subject to taxable similar to residents?
Is it FD? Is it the NRE FD or NRO FD? That is need to be asked. If it is a NRO FD, is anyway is taxable whether you be stuck or not, and no difference. If a NRE FD, I can tell you there is no taxability. As I said earlier, you all are NRI under a FEMA, Foreign Exchange Management Act. The stuck in India due to your physical presence in India, you only become a resident in India under the Income Tax Act, but you don't lose your NRI status under the FEMA. As long as you are actually meeting your NRI under FEMA status, you are eligible for the interest from the NRI account. You can note down, sir, section 10, subsection 4, subclause 2.
All right. Dr. Mahendran is here online. Yes, sir. Go ahead.
I'm not able to. Are you able to hear me?
Yes, sir. We are able to hear you. Go ahead.
Yeah, good. Actually, I want to know more about capital gain. Suppose if you are selling a house after 6 years, it's how is they calculating the capital index and what is the long term, what is the short term? This one I want to ask.
Yeah, it's already you are selling after 6 years. It is a long-term capital gain. You need to take the cost of acquisition and that particular stamp paper, and you need to index it. Okay, every year there is an indexation. Okay, and that there is a cost of inflation index. The year in you bought, that is the base index. Then you multiply by the year in you what you sell, cost inflation index. Then you arrive at cost inflation index, that is indexed cost of acquisition. That you reduce from your sale value. The resulting number, if it is a positive, it is a long-term capital gain. If it is a negative, it is a long-term capital loss. That loss can.
Format is coming negative, so I would write everything and there will not be any TDS, correct?
Yeah, there won't be any TDS. If that's the case, ideally, if you are going to do the transaction, the buyer, okay, if you are selling, you should inform the buyer to approach the income tax department. There is something called section 195(2). Under section 195(2), you can file an application to the concerned officer. You will get the nil TDS certificate.
So he has to get a nil TDS certificate.
Yeah. Otherwise, no, the registrations may not happen because these people may not understand the income tax provision. They will insist to get the TDS certificate. If you otherwise, the transactions stamp registration may not.
So the buyer has to approach the income tax department.
Buyer has to approach his income tax officer. Section 190.
Buyer is also a NRI.
Both, whoever it is, both can apply.
Okay. Thank you, Ramesh. Thanks for the thing. Thank you.
Thank you, sir. Thank you.
Bye.
Thank you, sir. So we have Mr. Abdul Rao asking, request, please explain RNOR and ROR again.
Okay. So, sir, actually, the slide actually have been defined. If you don't mind, sir, actually, you can actually take my WhatsApp number. Again, I need to explain 10 minutes to explain what is RNOR, ROR. 9746400931. That's my mobile number. I will explain it a little more detail, sir.
All right. So we have mentioned in the chat sir's number. If there's anything, you can contact.
You can WhatsApp me. I will explain it in more detail. I will also give you example also how a person become RNOR. It's a very difficult topic. That is why we put in a year-wise comparison to make them understandable. So anyway, still I can explain you, sir.
Right. Thank you, sir. Mr. Balachandran asks how the local income, that for example, rent income, will be tracked by the income tax.
Only by tracking is basically they will be tracking the tenant's expenditure.
Your tenant is a resident person, as maybe a salary person, that can be trackable, and your tenant is a business guy, and he would be claiming this rent as an expenditure in his business income, again trackable. So that's the only place actually the rental income. Assume you collect in cash, no one is claiming any expenditure, then it's very difficult to track.
And also he has a question saying, just a second, sir. It says how, okay, I'm sorry for the delay here. How 2 lakh travel expense will be tracked by IT?
Travel expenditure, you might be have a travel agent. Okay, you might be booking your travel plan with a travel agent, your hotel stay, your flight stay, all those things. So basically, track the personal expenditure. Okay, if you incur in India, okay, not assume you are sitting in Kuwait and booking all those expenditure in Kuwait. That cannot be comes under the kind of conditions. So the expenditure has to be incurred in India for the 2 lakh category, and so it is taxable if you do through a kind of a travel agent.
All right. So he also has question how IT will know whether I am an NRI or not while selling a property without sole declaration by tax filing.
Yeah, absolutely. And that is the reason, sir. Actually, today the passport is actually become and information is income tax is tracking. The new income tax portal has lots of informations they have. And I can give one particular example. They exactly know how many days you've been physically available in the country. Okay, those kind of information is available, and what the moment they get the passport details, they can track all your previous stay also. It's very much easy. Okay, earlier days, now when you file a return, you exactly to give your physical presence either 182 days. So they will ask your 15 lakhs taxable income, your 120 days, and then go back. Actually, you last how many years your physical presence in last 7 years. All those items earlier you will have an option resident, not resident, and non-resident. These are the option you select. Now you need to give exactly the number of days, which exactly the sections. So it is very much easy, sir, to track.
Also, he says how NRIs staying in India are being monitored to revoke the NRI status.
That is again your physical presence, and the moment as a person is back and there is no travel plan, and see, practically many NRIs actually they are back in India, they still continue to remain to be NRI, they maintain the NRI account, they still claim the interest exemption. This is a practice being followed. Okay, the country FEMA is not so regulated like Income Tax Act. So the banks, what they practice, what they follow, and the reality is something different. That's the reason actually, as I mentioned earlier, your interest income will be reported, even your NRE account interest income. The moment you stay more than 182 days, when you file a return, obviously you will be giving a resident category only. You cannot be wrongly give a form by a non-resident category. In that kind of situation, there will be a conflicting situation come.
All right. Thank you so much for that, sir. Mr. Mujibas, can NRI invest in mutual funds in SIP?
I think yes, possible. I don't. One second. Let me note down this question. Mutual fund. I don't think there's any restriction. Yeah. I don't think any restriction. Like my question, I don't know. Maybe some kind of concern that might be the reason he's asking this question. But I don't think any prima facie restrictions. If anything comes across, I will just let you.
All right. Mr. Satyanarayan asks, how can NRIs take benefit of indexation?
Yeah, indexation is especially for the property. Property indexation is eligible, but there are some indexation is not eligible for a non-resident. Indexation is a concept, no sir, actually valuations, the price fluctuations. Okay, you might bought a property maybe 10 years back. Okay, the indexation benefit, the cost actually in such a way that so your cost is being increased. So that extent you will have a kind of a reduction in the property.
All right. So we have someone who has raised hand. Quite
I think Shilpa, I think I have Mr. Dilip is here from Geojit, okay, and he confirmed there is no restrictions for making investment in the mutual fund in SAB.
All right, sir. Okay.
Thank you, Dilip, for clarifying this.
All right, so we have Mr. Someone, Kuwait Sky Yoga. If you could come up, yeah.
Yes. I am audible?
Yes, sir, you are.
Yes, sir.
Yeah, my name is Aruna Manikavasakam. Actually, I entered from that Zoom, so it is coming as Kuwait Sky Yoga. Okay. My question is whether wife is staying here with me, but her status is resident Indian. Is it okay, or is there any problem?
Yeah, so sir, actually there's no problem, but the many spouse of NRIs, actually they still maintain the NRI status, and also they operate NRI account, NRO account. So all those benefits, even they also eligible. Last sessions, one of lady actually asked the same question, and whether a spouse of an NRI also be treated as an NRI. Prima facie, my answer is under the FEMA. A person is become a the country, the two conditions basically for the employment or for a business or any other purpose for his intentions to stay outside the country for an uncertain period. So that any other purpose, maybe a spouse actually staying with her husband, that also to be a kind of a conditional thing for her stay also in the outside the country for an uncertain period. That purpose, we can take one view that okay, all the spouse of NRIs are also become a NRI, and still we are working on that particular concept, and a gray area, but it is not everyone is being practice wise. Every NRI spouse are actually maintaining NRI status in the country, but still we are working out is there any gray area still left out on that particular question. Prima facie, I believe all are NRIs, but maintaining there is no problem, sir.
It is mandatory to maintain NRI, or it is advantageous to maintain NRI?
Advantages to maintain an NRI.
Advantages, okay.
Yeah. The moment you being an NRI, you can still maintain NRI account, and your FD is still not taxable. Being an NRI, you have advantage.
But the source of income is from me only, no, not from my wife. How can I can put
source of income from a husband is not taxable. Between relatives is not taxable. You can put your FD in your wife's name. That is not taxable in her hands. Only the income what it generates from that FD only taxable in her hands, not the FD.
Oh, okay, thank you. And one more thing, I want to ask is this: if you are submitting this tax for wife, I put as resident Indian. Is it a problem for her?
Yeah. So the moment under this is something I discussed so far under FEMA, Foreign Exchange Management Act, not under the Income Tax Act. The moment a person residing outside the country, that means she stay less than 182 days or 100, depends upon the conditional thing. Then she always become a non-resident in the country, not a resident person.
Oh, so she has to be filed as also as NRI only.
Yeah. The under the Income Tax Act, it is a physical presence.
Okay.
The physical presence, not the intention.
Okay. Yeah. And last question is, sorry, I missed that Zoom.
No problem, sir. You can get back. It's okay.
Okay.
All right. So we have a similar question with Mr. Khalifa Rizwan. He says, can NRI invest in the name of spouse who is living in India?
Yeah. Make investment. No problem.
No problem.
Hey.
All right.
Yes,
go ahead, sir.
Yeah, this the same question only. This if I want to invest in my wife name, is it okay? But because they are telling you are the income, how you can invest in wife's name, like that they are asking. If I want to invest in some bond or something like that.
Yeah. You can always make investment in your wife's name. The moment you make investment, that means your capital also transferred to your wife's name. Okay, there is something called clubbing of income. So what is a clubbing of income? Assume you are not transferring a asset. Okay, without transferring an asset, you actually transfer an income. For example, a property which is in your name, and you are saying, okay, the tenant, you are saying, okay, please deposit this rental income into my wife's name. Okay, but that rental income still taxable in your hands because the property still belongs to you. It's not in her name. Okay, similar. You put a deposit, that means that deposit is in her hands. Okay, she can use it the way she wants. Okay, you have no rights on that because she is the single owner of that particular cash right now. She can dispose it, she can liquidate whatever because that is asset belongs to her. So a person owns the asset, then technically that income also taxable in that particular person.
So I can invest on her name with my income.
Yeah, you can make investment. That means that investment in her name, that means she can liquidate. That money will also come into her account.
Her account. Okay.
Yeah.
Okay. Thank you very much.
Am I clear, sir?
Very clear. Very clear.
Yeah. Thank you, sir. Yeah.
We have again a similar question here, sir. Mr. Zakir asks, if a house is in wife's name, is it considered as a part of husband's property? For example, if I have 2 houses in my name and 2 houses in my wife's name, and wife is not working but residing in Gulf, are the capital gain on the sale on the property 3 and 4 taxable?
So many facts anyway, but conceptually what I tell you, the property, who are the ultimate owner of the property, the capital gain taxable in the hands of the property owner. Okay. If the joint owner, the capital gain also split. If wife is only owning the property as sole owner of those 2 property, if any capital gain on the sale of property, it is taxed in the hands of the wife. Whether the first transactions, maybe the entire investment is made by the husband, the registration is being done under that name, that means almost it's a gift kind of transactions, and so that is still taxable.
Hello?
Hello, sir.
Yeah. Can I speak now?
Yeah, please, sir.
Yes, sir, go ahead.
Okay. Thank you, sir, for your good information. At least it's enlightening, really, because day by day things are going entirely tracking more.
Yeah.
Actually, my wife and the kids are staying in India more than 2 years.
Okay.
And but still, I mean, she's having a resident status also. Even the kids are having resident status.
Okay.
And my wife's NRI account still continuing, NRI account.
Okay.
And we are doing transactions on that.
Okay.
So is it allowed to continue NRI account, or do I need to change it?
Yeah, no, I don't think so. Since you both have actually the civil ID or the residential status, and her intentions to stay in India is only for a limited period. And I understand she will come back again in Kuwait, and she is still continuing to pay NRI under FEMA, and she can still operate the NRI account.
I mean, yeah, because of the kids' education, she's continuing for more than 2 years there. So that's why she will be coming back after maybe a year or 2. So in that case, I can still maintain the NRI account. Am I right?
Yeah, you can maintain. Yeah, because she still she has the civil ID, right? Not closed.
Yes. No, not at close. Even the kids are also having that one, so we can maintain. Okay.
And they only went to doing a particular limited course. No, you should have kind of a reason why actually they should come back.
Yeah,
see, uncertain period is 2 years, is not an uncertain period. It is very certain.
Okay. Okay, sir. And one more thing is, I just wanted to know that so now they have opened an account like for the colleges and other things. Local transaction. So these accounts, they made it as a resident account, like HDFC Bank, even we told, but they made it as a resident account. That is the conflict we are having. So how to resolve that?
Yeah, that is a conflict, sir. Actually, no. NRI under FEMA, you can maintain only 3 bank accounts. One is a NRO, NRI, then is basically FCNR account. So these are the 3 bank accounts you're supposed to maintain. You're not supposed to maintain SP account. Don't do the transactions. And practically, I don't know the consequences, but the banks are actually still. I don't have an answer for this. This is basically
because in fact, we told banks they are not unable to make because if if it is a different bank, that's why they're saying if it is a different bank, we cannot make it as a NRI and other things. That's what. Even the same bank, sometimes they are saying no, don't. It's not. It's not a problem. I don't know how it is. It is really a conflicting situation.
Yeah, it will be. It will be.
It will be, okay. So how to resolve it? So still.
You actually don't operate the SB account. Okay, that is a conflict. You either you want to maintain an NRI status or a residential status. The moment you believe you have a very stronger case on doing the transaction, like I said, no, your intention is a very subjective term. Intention to stay. Okay, but as of now, no, FEMA or RBI is not comes into that kind of an auditing kind of a situation like your income tax or a GST loss. So that's the reason actually many people actually been part of the life actually they operate like it is because bank never been very strictly pronounce all those things.
And basically, I mean, for this thing, it is a wealth account. It's not a savings bank account. A wealth account is. I mean, there is a difference in that. I mean,
wealth account means
they are saying that it's doing for transaction of shares, mutual funds, and other things. And
that suppose you should not be doing because I will tell you, sir. Actually, share trading the TDS is applicable only in the case of a non-resident. Correct. Your 20%, 15%. Yes. Those TDS is applicable only in the case of a non-resident. Resident there is not TDS. Okay. Yes. So how come a person is actually maintaining a resident demat account when you do the share trading? That is not allowable.
Okay.
Yeah.
But I had to because the banks did not accept it. That is why I'm just asking it because then in this case I need to ask them to change it to NRO. Am I right?
Yeah. You should be changing because when you do the share trading, definitely you should be changing it, sir.
Okay, sir. Thank you.
Thank you, sir.
Thank you, sir. We have Mr. Dilip Gopinathan asking, need some clarification on Suganya Samriddhi for NRE.
Sir, actually, what we understand, Suganya Samriddhi scheme NRI shall not be making investments, and practically, I don't know why that's such a restriction. I have no idea, sir, actually why the restriction. But what we came to know, NRI cannot make investment in the Suganya Samriddhi scheme.
Right, we have Aishilyam. I'm sorry if I'm pronouncing it wrong. We have. Do you also have a Zoom lecture on Indian businessmen investing overseas for business?
Can you repeat the question again, Shifa? I missed the question.
Yeah, it says, do you also have a Zoom lecture on Indian businessmen investing overseas for business or any investments?
Yeah, of course. I don't have a standard lectures. We help because we are basically a business consultants, and income tax is basically a passionate subject for us. That is the reason actually PravasiTax is something we've been developed and to create more awareness for NRIs community and take care of their compliances in India. Otherwise, we are typically a business consulting firm, and we do lots of US and Gulf NRIs. Their business actually we consult and we take care of their compliances. We can take it offline, ma'am. No problem.
All right. Thank you, sir. We have. What will happen if we trade in stock market and invest in mutual funds through resident SB account and demat account?
What happens?
What will happen if we do it with this SB account, like an NRI?
No, you can ask you can repeat the question again, please.
What will happen if we trade in stock market and invest in mutual fund through resident SB account and demat account?
So technically that means using the trade and making in the resident mutual fund account, right?
Yeah.
Yeah. So again, a conflicting only because a person is maintaining two accounts. One is another trade account and there is another resident demat account for the mutual fund.
Mm-hmm.
Yeah. So it will be a situation.
I hope that is clear, sir. I have, if I receive a check of 4 lakh, should I declare an income tax return?
Reason for the check is very important. What purpose that check is received? Okay, it's not a blind. I believe if it is an income, of course it is a taxable income, that is taxable, and more than 2.5 lakhs it is taxable. So it all depends upon what is this particular whole check about.
All right. We have a question from Mr. Jay Seelan. He says, I donated to Orphanage 1.5 lakhs. and donated to blind school students about 15,000. Is it mandatory to file tax?
No, sir. Not mandatory to file return.
All right. I think there's a question more. I did through normal savings account. So is that mandatory?
No.
If the
Donation is basically, if you want to claim any deductions against the ATG, there is a 50% of donation what you do. No, 50% is eligible when you against your taxable income. As long as you have any taxable income, what you make investment as a what you make as a donations in the country, it is not mandatory to file the return.
Right. Miss Aisha, I guess, asked what are the procedures that we need to follow in income tax?
Procedures means?
I guess Miss Aisha is asking about how to file a tax. Is that what, ma'am? If you can come over, talk.
Okay. For filing a tax return every financial year, that is means April to March, this financial is over. The compliance is supposed to be done. Subsequent July of that year, you need to file a return. And this year it is December 31st, 2021. That's the last due date. And you need to file a return, and that's a due date. And because of the new income tax portal has a lot of glitches, we expect there could be she's actually messaged now that was related to earlier question with regards to overseas investment from India. Yeah.
All right.
Yeah, fine,
Thank
no
you.
problem.
All right. We have Mr. Zaid Jalal asking how to change the earlier opened savings account to NRO from outside India. Also, how to change the resident demat account to NRI based. From Zerodha, he's doing, I guess.
Yeah, I think from the resident demat account to
NRI based. I guess from NRI account. Okay. If Mr. Syed is here, it could come up and ask a question.
Mr. Dilip is here. I am not sure whether he's there. Hi Dilip, are you here? Are you here?
All right. He says, can we do from outside India? I just feel, sir, he's asking if there is an NRI account that he's maintaining. Can he do a share trading from the NRI account?
Hi, Sreejith.
Hi Dilip. Hi. Can you clarify this question, Dilip?
Yes. Resident account can be transferred to NRO, not NRI.
NRO, correct.
Yes, NRO, non-resident ordinary.
Can it be done from outside, sir? Outside India?
Yes, can be done, yeah.
All right. Mr. Syed, I hope that was clear to you.
Thank you, Dilip. That's a practical.
Thank
that
you
is
so
a
much,
practical answer from Dilip. He's from Sreejith, and they have a lot of hands-on experience on these cases.
Thank you for that. So, Mr. Abdul asked, within what period should an NRE declare to become resident when there is uncertainty to return overseas?
Immediately, sir. If there is an uncertainty, automatically you lose your NRI status. If there is even a single chance of uncertainty.
So he's asking within what period should he declare the NRE to become
under FEMA? It is mentioned immediately. Immediately means, to my understanding of reading, immediately is the next day. Okay, that is the law has been written, but practically many of them not done use it like. But the law is actually immediately.
Again, Zakir asks, what is the rate of tax if we obtain lower tax certification for sale of property?
What is the rate of tax? What is the rate of tax?
Yes. If we obtain lower tax certification.
It is not a lower tax certificate. There is no concept of lower tax certificate for the sale of property. So what exactly they do, they will arrive you the exact portion of the capital gain. So that means most of the time, the capital gain portion is basically very difficult to determine. Okay, seller may not give the exact cost details. So in that reason, actually the buyer can approach the income tax department, file an application saying, oh, this is my sale value, this is my cost, and after doing this indexation, even you can give a kind of an indexed cost calculation also. Okay, even there is any cost of improvement, that also be covered. So that means you can actually do a better presentation or a calculation to the income tax officer. Once he is convinced, you will get a TDS certificate in such a way that this is exact portion of the capital gain where TDS has to be applied.
All right. I hope that was clear, sir. We have Mr. Srinivasan asking, is FCNR deposit interest taxable for a returned NRI?
FCNR account is basically a foreign currency non-resident account, if I'm not wrong. Okay, the moment you are back, actually the FCNR account is not taxable the moment you become a ordinary resident. Okay, NRI account has a restriction. FCNR account, I doubt whether the moment the person is become a non-resident, if any challenge in closing a FCNR account, only the person is become a resident, that person has to be maintained the resident foreign currency account. FCNR account can be maintained only by an NRI. The moment the person is lose his NRI status, that person need to be that account will become a kind of a resident foreign currency account. That resident foreign currency account interest is taxable only the person is become a ordinary resident in India. Not at least for the next 2 years, you will claim the interest portion as an exemption.
We have Mr. Balachandran asking, property in NRI name, that is an ancestor property, rent collected in wife account. Then when wife files IT, how should the rental income, which is like more than 7 lakhs, be accounted?
So in the ancestral property by the will, who is actually the ultimate owner of that particular property, that person only to offer that particular rental income. Otherwise, if the wife is not the official owner of that particular property, it will go back to the person as had the clubbing provision.
I hope that was clear, sir. We have Mr. Shahir asking, which account should we use for mutual funds for NRIs? NRO account or NRE account?
Both account can be used.
Both account can be used. I hope the answers were clear. Is there anyone else who wants to ask questions? Because we are done with the questions right now.
We had a long question at Q&A. This is very interesting. I think this TEF members, actually a good number of people actually done the investment in the share market. That's why most of the questions come from the share market side.
Very true, sir. A lot of people ask the questions. Yeah.
I think the session is informative. And again, I thank you, TEF, for arranging this session. Also, I thank Mr. Afsar Ali for getting me this access also. And I think all the members actually got the discussion was quite informative. Thank you, Doctor. Any other questions? All right.
I do not think, sir. They're all thanking you. And I was just putting in the contact details of us, our email address and the number. If anyone would like to contact for any more queries, welcome.
Good evening all. On behalf of Tamil Nadu Engineers Forum, I thank our today's guest speaker, Mr. Sreejith. We are really enlightened with your presence, and this session created significant awareness on NRI taxation to all our members and participants. Also, I thank Mr. Afsar and Ms. Fatima for support in arrangement this session, and also thank to those who have directly or indirectly contributed for the successful of this session. See you all in the next event. Thank you.